let's talk about what everybody wants to hear. Tesla. Tesla joined the S&P 500. We got that news at around 6 o'clock tonight. And, I got the alert on my phone and I'm like, oh man, this is crazy because it had been speculation that Tesla was joining the S&P 500 for months.
September, they got deaded, man.
Yeah, it was like when Ripple was supposed to join Coinbase. I still have nightmares. I still have nightmares about that. If you're in crypto, you know what I'm talking about.
Don't bring up old things.
But so first, I'll just explain why the S&P 500 is even what it is actually, because people might not even know what it is, right?
Mm-hmm.
Standard & Poor's 500. So it's a stock market index, which is probably the most respected stock market index. So there's a couple. There's the Dow Jones, NASDAQ, Russell 2000. So the S&P 500, what it is 500 companies. It's like a microcosm of the market. 500 large companies that make up, different sectors inside the stock market. And so usually, like when you hear the stock market is up or the stock market is down, they're not talking about every single stock on the stock market. They're talking about an index, and the indexes are usually the Dow Jones or the S&P 500. The Dow Jones has 30 stocks in it, and the S&P has 500. So obviously, if you just look at it like from a science experiment, 500 is a better case study than 30. Like it could be 30, can be more skewed. So the S&P 500 is a big deal because, like, if you have a 401k, you usually have like an index fund, right? So in the S&P 500 is usually that index. Life insurance policies a lot of times have index funds, hedge fund managers, mutual funds. So it's a lot of institutional money that goes into it. So being that Tesla, somebody has to get kicked off.
Yeah, that's the part that people got to realize.
It's only 500 companies.
And maybe two companies got kicked off because Tesla their valuation is so high. They're coming in at like almost 400 billion.
The largest ever.
So they may have to be broken into separate pieces. Nobody knows yet, but that could be a possibility.
Yeah.
So maybe two companies got to go.
Yeah. So pension fund, 401k. So now it just gives more exposure to Tesla as a company. And of course, we've talked about Tesla till we was blue in the face. So it's no, obviously we are partial to the company. We like the company.
Yeah.
But there's other ways to. First, let me just say this. Everybody can have their own opinion on it. Stock market, the Dow Jones right now is at 29,950. It's 14 points from its all-time high. The S&P is 19 points from its all-time high. NASDAQ is 84 points from its all-time high. So the stock market is pretty much at an all-time high right now. And we're in the middle of a global pandemic that's not over yet. And we're still in a global recession. So, it's pretty much common sense that we're going to have a pullback, right? You don't have to be a rocket scientist to figure that out. So it might not be let me just say that it might not be the best time to put money into the stock market right now, because it's going to pull back soon, probably. It's common sense, right? So let's just put that out there. But of course, you can do whatever you want. Tesla.
Don't buy the high unless you're stupid. I'm gonna just be straight to the point. Especially Tesla, don't touch it. Because I don't want to hear it next week. Well, you guys said to buy. No,
you guys said. You know what's so crazy though is like the number one rule in investing is buy low, sell high. Mm-hmm. But 90% of retail investors do the exact opposite. They buy high and then they sell low. I use Bitcoin as an example because that was the most famous of recent time. If you follow the Bitcoin craze a few years ago, it was at 7,000. I bought Bitcoin and it was at 5,000. And then I saw it go up. I saw it go up to 6,000, 7,000, 8. When it started to go up, everybody was talking about it on social media. 9,000, everybody's like, your barber starts to talk about it. 10,000, it's like, okay, what's going on? 12,000, then it's just jumping. People's on the fence. Now they like researching crypto. Crypto becomes the number one Google search word, but they're still not really buying it yet because it's like, I don't know, it could be a scam. And then it gets to 18,000, and then it gets to 19,000. Then everybody puts their money in, and then it's 19, and then it goes up to 20, and then it's like, all right, I made 10% profit, and then it crashes, and then it goes down to 4,000.
Here come them whales.
And then what happens is that you bought it at 20,000. Psychologically, you don't look at it like, damn, I lost 80% of my portfolios at 4,000. Why am I going to sell? You look at it like, I don't want to go to zero. Now I'm nervous. Now I think this thing could actually go to $0, and you sell. And then it goes back to where it's at now, 16,000. And then you buy, and then it goes back down to 3,000, and then you sell. So this happens all the time. Crypto obviously is a lot more volatile, but the same thing happens in stocks. You don't necessarily think that Tesla's going to go to zero, but you buy at a high, it crashes, you lose 30% of your portfolio, you panic, you're like, damn, my wife's not going to be happy with this. I'd rather just lose 30% than lose 60%.
The wife, man.
I'm wife, husband, whatever, however you want to flip it. But psychologically, that's extremely important to keep in mind. Like, do not buy high and sell low. No matter how many times say that, 90% of people are still going to buy high and they're going to sell low.
Yeah, and that's why I'm not super excited about Tesla. If you go look at where it is now, it's at the same high from October 12th, almost to the penny.
I'm looking at it right now.
It's not a time to chase. I'm happy that it got added to the S&P. I was not expecting that. Didn't think it would happen for a couple more years. I'm glad they got in. Exxon got kicked off. So that's another reason why I keep saying we are slowly watching oil die. Like, if you would have told me 10 years ago Exxon would have got kicked out of the S&P 500, I would have laughed in your face. We're living in a different time now. But we're saying right now, in a high of Tesla's 502.49, and we're at the high from October 12th. Wait for it to pull back. Wait for it to pull back. But Stock Club members, Xander needs some Miles Morales toys, because I've had y'all in since March. So enjoy. But be careful. Be careful. And like Rashad just said, you do not want to keep buying at highs because you're going to be upset when it drops 10 or 15% here soon.
Yeah, and people are going to look at it. They're going to look at the after hours. They're going to say, yo, it's up $54 tomorrow morning, 9:30. I'm in. So this is just a fair warning.
Just be careful.
Just be careful.
But I still think that Tesla's a good company.
Yeah, and that's why I said. And if you don't want to have just a singular position, we've mentioned ARK 1,000 times. Like, ARK is a fund that, you know, it's one of its major allocations is Tesla, whether it's ARK or ARKW. I'm still a little tight with ARKW. They haven't extended their chain yet, but that's neither here nor there. But yeah, you can just go into the ETF. You know what I'm saying? So anybody who's in there already, tomorrow should look pretty decent. But
you don't want to buy anything at a high.
Don't buy that at a high.
And somebody said dollar cost. Yeah, dollar cost averaging is definitely a great way to invest. Definitely a great way to invest. And anybody not familiar with dollar cost averaging, that's when you're putting the same amount of money in on, like, let's say a monthly basis or a weekly basis. So in that case scenario, then it doesn't really make that much of a difference because you're going to buy high, you're going to buy low. It's like your 401k. You put money in over the course of time, it averages itself out. So if that's your approach, and that should definitely be everybody's approach, to put money in on a consistent basis, that's definitely a good way to go about it. I was just talking when people do like lump sums, like you just have like $10,000 left and you think it's like Vegas. The problem is that people treat stock market like gambling because it's synonymous, especially option trading. It could be synonymous with gambling. The difference is that I always say gambling is a game of chance. Investing is a game of knowledge. I know there's going to be some people like, well, poker, you can actually, I know, I get it. It's always a critic. But the bottom line is that you shouldn't be investing based off of just gambling. You should be investing based off of knowledge. And being that, you got to know your own risk tolerance. Like, so me personally, I'm more of a conservative person. I don't want to have high levels of anxiety. I've spoke about this before, and I don't want to be nervous just investing. So I do the ETF route. So I knew Tesla was a good company, but I just didn't feel comfortable investing in Tesla. I just, for the option.
I did both.
So I did the ARK ETF. It's like, I think it's 7% of ARK, but it's 10%. But if you know ARK, you know that not only does it have Tesla, it has Netflix, it has Roku, it has NVIDIA. So it got a lot of great companies. It's like an all-star team. Yeah. I'm comfortable with that. Because I know that if one goes up, the portfolio is going to go up, but I'm not banking on just one particular company. It's a safer play. Yeah. I know if you invest in one stock, you can earn more, but you can lose more too. So you got to play your risk.
This is 1,000% facts. This is exactly how our phone calls go.
Yeah, you got to know who you got to know your personality.
It's at 461 now. I'm going to tell you guys, do not be surprised when Tesla drops back to 344. Don't be surprised.
Wait, the purple ball just came out?
Don't be surprised.
Put the purple ball in the chest. They're going to be like, yo, Ian called in.
Don't be surprised. But because they still great company. But even so for those of you that are big on crypto and any asset, if you wait that 5 to 10-year holding period, if it is truly a good asset, you're going to get dividends from it. So if you truly believe it, hold it. When you are ready to sell an asset, it's usually a sign that you chased it and you got in too high. The rules apply the same. If a house is worth $525,000, I'm not offering $524,000. I don't care if I have $200,000 in it. I'm not offering $524,000. I want you guys, and this is the ideal time when the market is closed, to go on a chart and say, hey, if the high was 502, where would I want to buy? Where if it dropped to that price, I would be happy with it going there. Please write this down. Pre-select your prices for your primary investment vehicles. I want you guys to stop guessing. Hell, you can just get a dry erase marker and mark off top, bottom, middle, and okay, right about here. But I don't want you to chase when the market is moving fast just because you think that you're going to miss out. That will not give you an edge. I will not give you an edge. Nope, no puts on Tesla. I want you to hold Tesla for the long term. They have Wi-Fi on Mars. No, hold. Tesla's a good company, and they haven't even started. They're like Elon to me is our generation Steve, but the company is currently structured how Amazon was. Look how long Amazon's been. Like Tesla is the new Mercedes.
Big fact.
Big fact.
If you could have invested in that in 90 and Mercedes is still popular, then hold the company. Because then, well, I mean, I'll do it right now. Hold on. 5-year target for Tesla is 794.08. 794.08. So when I have that push up to the moon and it goes above 700, you're going to cry. Just mark off where you want to get in and hold. Because I don't want you guys to look back and be like, man, I should have listened to you. Those are some of the most expensive words you can ever utter.
Costly.
Yep.
Those is costly. Yeah, man.
But the choice is yours. Either way, we'll be here.
Trade over has spoken.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.